All right, welcome to the AI Investment Memo. Today, we're diving deep into a company called Zebra Technologies. Now, you've probably never heard the name, but I can almost guarantee its tech is all around you. So, let's get right into it.
You know that package you just ordered online? Ever wonder how it gets from some warehouse to your front door? Well, every single step of that journey, every scan, every sort, every tracking update, was probably powered by some piece of tech you never even saw. And yep, that invisible backbone, that is Zebra's entire world.
And that's exactly why we're calling them the hidden tech giant. They're kind of like the invisible engine that's powering the whole show. Modern commerce, logistics, even healthcare. They are everywhere, just, working behind the scenes.
So what do they actually do? Well, their whole mission is built around this idea they call enterprise asset intelligence. Now, it sounds a little corporate and jargony, right? But the idea is actually super simple and really powerful. It's all about giving physical things, like packages in a warehouse or medical supplies in a hospital, a digital voice. We're talking about those barcode scanners, the rugged mobile computers you see delivery drivers use, and specialty printers, all connected by really smart software. That whole ecosystem is what's made them such a dominant force.
But here's the thing. They didn't just appear overnight as this data powerhouse. Nope. Zebra has a really fascinating transformation story, and they started out as something way, way simpler.
You can really see their evolution laid out here. They started way back in '69, and for decades, they were basically the name in specialty printers. But the real game changer, the moment that turned everything on its head, that was 2014, when they bought Motorola's enterprise division. Man, that was the move. It completely redefined the company and set them up for their big push into software and automation down the road.
And just to give you a sense of the scale here, look at that number, $3.45 billion in cash. This one single deal literally tripled their revenue overnight. It took their leadership in printing and slammed it together with Motorola's total dominance in mobile computing and scanning. Boom! That's how you create an undisputed market leader. Okay, so that's the backstory. Now, why would you even consider investing in Zebra today? Let's dig into the bull case, the arguments for why this could be a great buy.
The whole optimistic view really stands on these key pillars. First, they are the undisputed number one in their space. No question. Second, they have this massive economic moat, which is just a fancy way of saying they're super sticky. I mean, once a warehouse or a hospital builds its entire workflow around Zebra's gear, switching to a competitor is a total nightmare. It's just too expensive and disruptive. Then, you layer on the fact that they're perfectly positioned for huge trends like e-commerce and automation, plus a growing software business and thousands of patents. Yeah, the bull case looks pretty compelling.
And this chart here really highlights a key part of that bullish strategy. You can see hardware is still the big moneymaker, about 80% of their revenue. But that 20% slice from services and software, that's the golden goose. That's the part investors are really excited about because it means higher profit margins, predictable recurring revenue, and it locks customers in even tighter. That's the number everyone's watching.
But of course, it's not all sunshine and rainbows. Every investment has risks. So to be fair, we have to flip the coin and look at the bear case. What are the things that should make an investor a little nervous?
And honestly, this chart says it all. The big word here is volatility. Just look at these wild swings. They had this insane 26% growth spurt during the pandemic when everyone was ordering everything online. But then, bam, a 21% drop right after, as all those customers hit the brakes. The recovery we're seeing now is great, but it really just proves how much of a roller coaster this business can be.
So let's break down those headwinds. Number one is that cyclical demand we just saw on the chart. Plain and simple. When the economy gets shaky, businesses put off buying expensive new gear. Number two, competition. They're not alone in this space. They're constantly battling giants like Honeywell. And third, and this is a big one, is execution risk. They've spent a ton of money buying up companies in flashy areas like robotics and AI, but now the pressure is on to prove that those expensive bets can actually make money.
And that execution risk isn't just a hypothetical. It's a real concern for critics. In fact, a recent report from the short seller Spruce Point Capital didn't pull any punches. They basically called these big, expensive acquisitions in robotics and AI failures so far. That kind of criticism really makes you question whether this huge strategic shift is actually going to work out in the end.
Okay, so that's the puzzle, right? On one hand, you have a dominant market leader. On the other, a cyclical business with some serious questions about its latest big bets. So, how do we balance all of that to come to a final verdict?
Which brings us right back to the main question. After looking at all of this, is Zebra actually a worthy investment?
And this table really puts it all side by side. The bull case is clear. Market leader, a protective moat, riding huge waves of growth. But the bear case is just as clear. That revenue roller coaster, intense competition, and the big what-if hanging over their new ventures. It's really a classic showdown between solid long-term fundamentals and some very real short-term risks.
So what does this mean for the stock price right now? Well, taking a look at a valuation snapshot for Morningstar, the stock's been hovering around $330 a share. But they think its actual fair value is closer to $365. So what does that tell us? It suggests that maybe, just maybe, the market is a little too focused on the recent bumps and that the stock might be a bit undervalued if, and that's a big if, they can deliver on their promises. And that brings us to the memo's bottom line. The conclusion is pretty clear. Zebra seems like a really solid, long-term way to invest in the digitization of pretty much everything. But, and this is the important part, you have to have the stomach for it. You have to be willing to ride out those economic ups and downs and be patient enough to let their big strategy actually unfold.
So at the end of the day, Zebra is basically the essential plumbing that makes our digital economy work. The memo paints a picture of a really high-quality company that's just on a bit of a bumpy road right now. A solid investment, but only if you're prepared to handle the ride.